Welcome to the continuation of our commerce. We're going to look at business units part 1. Okay, so this topic is going to have the following subtopics. So we're going to start with understanding what business units are by taking a look at the introduction to business units. Once we finish, we're going to take a look at a type of business called sole trading. After sole trading, we're going to take a look at partnership. So this video is going to end on partnership. The next video is going to continue on private limited companies. After that, we'll take a look at public limited companies. Then we'll take a look at multinational companies, public enterprise, and we're going to end with capital of a company. Let's get started. So what is a business unit, or what are business units? Okay, so the definition is simple. Business units refers to the various ways of owning the business. Okay, you can own the business alone, you can own it with a friend, or you can own it as a group. Again, a business can be owned by the government, or it can be owned by the non-government entities. The term we use for that is private. Okay, so the business can be owned by the government or the private sector. So these are different ways in which a business can be owned. Okay, so there are two main categories of business units. Okay, these are private enterprise and public enterprise. Okay, so let's understand what each of these is. Okay, so what is a private enterprise? So a private enterprise is a business owned and controlled by a private individual in which the government has no say. So any business whose owner and the person controlling it is not the government, that business is a private enterprise. Examples of private enterprises include sole trade, which we're going to discuss in a few minutes, partnership, private limited companies, multinational companies, clubs, and cooperatives. Okay, so these are examples of private enterprises. Okay, so we start with sole trading. So sole trading is a business owned, managed, and controlled by one person. Okay, so if you have a business where you sell maybe handbags and you're the only one who owns that business, then that is sole trading, and you are a sole trader. Let's take a look at some features or characteristics of sole trading. So the first feature is it is easy to set up. Okay, the fact that you can manage it, most of the times it means the amount of operations that you need to do for it to be running are not that many. So even just for it to start running, it is easy. Okay, the other feature is it has little capital required. Okay, the other one is it's very flexible. Okay, which means you can easily switch from one business to the other if not profitable. So if you see that the bags are not making sense, you can go into a business of selling gensets, since gensets may be on demand because of load shedding. Okay, also there's less documentation required. Okay, maybe you just need a few documentation to deal with the authorities, maybe ZRA. Otherwise you don't need any don't need a lot of formal documentations. Also it is suitable for many different businesses. Okay, so trading works for different types of businesses. Okay, another feature is it is very independent and quick decisions. Independent and quick decisions are made That is to mean your decisions cannot be influenced by other people. You are the owner, so you make decisions, okay? And you won't waste time making decisions. If, for example, it wasn't just you owning that business, if there was another person, two of you, then maybe if you have you have to make a decision, you have to argue, you have to you have to exchange a lot of information so that you understand each other's perspective and make the decision. But since you're just alone, so quick decisions are made. Also, profits are not shared. There's no one who is contributing, so no one should be getting the profits. Okay. Also, business affairs are kept privately. Okay, they don't need to share the business affairs with anyone unless you choose to do so. Otherwise, business affairs are kept privately. There is also personal contact with customers. Since you are the only one owning and managing that business, then the chances that you may be the one meeting the customers to do business are high, and customers may get attached to you, or you can know what customers really want as you talk to them. You can be selling maybe red handbags, but maybe the customers, most of them don't like red handbags. You are the only one who likes red handbags, but not the majority of the customers. So they can tell you that no, we prefer pink ones, and therefore you can change. You start now selling pink ones. Also, it is very easy to control and manage. Okay, so let's take a look at advantages of sole trading. So the advantages are just what we're from discussing, the characteristics themselves. If you can remember, all the characteristics were talking about good things of sole trading. Therefore, they are the advantages. But let's just do a recap. Okay, so one advantage that we mentioned is it is easy to set up. Another one, it is easy to control and manage. It requires more amount of capital to set up. There is independent and quick decisions on how to run the business. The owner has personal contact with customers. Profit is not shared. Business affairs are kept private. There is less documentation required, and it is very flexible. It's suitable for many different businesses. Okay, so these are the advantages. So even in an exam, if they ask you about advantages, these are the advantages to produce. And again, if they ask you about characteristics, these are the characteristics again. Okay. So next we look at disadvantages of sole trading. So the first disadvantage is that in sole trading there is unlimited liability. What does it mean? Unlimited liability means that the owner of the business is responsible for all the losses or the debts that the business is going to incur. Okay, so in case the business borrowed money or the owner borrowed money for the business, okay, in case the business has failed to pay, then the owner is going to be dealt with. The owner is the one who is supposed to pay. Okay, so it may sound like it's something obvious, but most of the times, or apart from sole trading and partnership, a business and the owner are treated as two separate entities. You and your business are separate individuals. Okay, so in case you have a business and you get money from the business, it means you have stolen from the business. If it's not maybe if you have paid yourself, okay, you can't just get money from the business has to pay you. Okay, so in a case where you just get money for no reason, then it means you have stolen from the business. Okay, so the owner and the business are treated as two separate entities. Okay, but for sole trading, the owner and the business are not treated in that way. Okay, so if the business has debts, okay, it has to pay back in Congole, then the owner is responsible for that, not just the business. Okay, so that's what it means, unlimited liability. Okay, in other situations where there's limited liability, that is in other types of business entities apart from sole trading and partnership, when a business has a debt, the business has to pay, not the owners of the business. No, the owners of the business are not going to be responsible for that debt. Okay, so it will be the business itself. So for sole trading, the disadvantages is there's unlimited liability. If your business has debt, but the one who's going to pay the owner in case it has failed to pay. Okay, there's also it lacks continuity of existence. What does it mean? It means the death of a sole trader may end up the business. Okay, since there's no one who understands how the business goes, so if the sole trader dies, the business also dies. Sometimes it can be just the sole trader is sick, and the business is going also to be disrupted because of that. So there's no lack of there's lack of continuity in terms of, especially in terms of existence. Okay, so that is another disadvantage of sole trading. Third, has no separate legal status. Okay, he can sue or be sued in his or her individual capacity. Okay, so again, because sole trading, there is no separation between the owner and the business. So even when it comes to legal issues, the owner can sue other entities, or the owner can be sued. Okay, so that's another disadvantage of sole trading. Also, because the money is coming from one person, so there's little capital for business expansion. Okay, so that's another disadvantage of sole trading. Another disadvantage is it lacks borrowing capacity because of limited capacity. Since the owners small amount of money, so they can't borrow a lot of money, because how are they going to borrow a lot of money when there's no guarantee that they're going to pay back, or in case they fail to pay back, where are they going to get the money to pay back? So the people who give out money, the lenders, they will look at the capacity of the business. What is their financial capacity? So if the financial capacity is not promising, if the financial capacity is small, then they will not have confidence to give out money to that business. Okay, so it lacks borrowing capacity because of limited capacity. So the next type of business entity is partnership, which is defined as a partnership is an association of people who agree to run the business together with a view to make profit. Okay, so when two or more people come together with an idea of running a business, then it's called a partnership. So now, for a partnership to be formed, for these people to come together, what is it that has to be done? So the number of people to form a partnership is 2 to 20, except for professional partnership. So other than what are called professional partnerships, a partnership needs 2 to 20 people. They should not exceed 20. They should not be more than 20. Okay. So again, it shouldn't be one person. You can't be a partner to yourself. No, it needs 2 people or more than 2 people. Okay. But the maximum number should be 20. Okay. So anything more than 20, then it's not partnership. Okay. So other than that, when forming a partnership, some legal formalities are required. Okay, you can't just agree by word of mouth that you're partners. Okay, even if you are best friends, even if it's husband and wife, you can't just agree, because these things have consequences. Okay, so you need some legal formalities that you have to make sure that they're in place for that partnership to exist. Otherwise, it's not a partnership. Okay. So now there's an article called Article of Partnership, which is also called Partnership Deed. Okay, so this article spells out the duties and rights of partnership. Okay, so if you want to know everything about partnership, when you want to form a partnership, go to this book. Even in future, when you want to do business, of course you may not remember the notes, but at least remember that there's a document called Article of Partnership or Partnership Deed. and that will guide you on what you're supposed to do to have a formal partnership enterprise. So this document called a partnership deed, what does it have? Okay, so what does it have? So this document has of course a question can come which says outline the contents of the articles of partnership or partnership deed. So this document has the name of the partnership. Okay, it also has the amount of capital each to contribute. So if, for example, there are two of you, you want a business needs 1,000 kwacha. So each of you has to contribute a certain amount of capital. Okay. You can agree maybe, let's say one has more money as compared to the other one. Provided that you agree, you have to write it there. It's not always that since you're partnering, you're supposed to contribute equal. It may depend on different issues that you have to consider. So it can happen that one partner contributes 600 kwacha, the other one contributes 400 kwacha. Then you put together the resources. Okay. Also, the sharing ratio of profits and losses is indicated in that document. Okay, because it's not always that you contribute 50-50. So even the profit or the losses, you cannot also share 50-50. So you have to agree on the sharing ratio. Okay, when you have made the profit of 100 kwacha, you are going to get how much, I'm going to get how much. All that has to be documented. Also, the specific roles each partner has to play, it has to be stated. What are you going to be doing in this business? You can form a partnership, then one person is busy running up and down, then the other person is just watching. Okay, so you have to state this person is supposed to do this, this, and this. This other person is supposed to do this, this, and this. Okay, that's why sometimes we find that partnership don't work. When you want to partner with a friend to do a business, they don't work because we don't refer to the partnership deed. We don't sit down and, of course, draft a document equivalent to this deed, which has all these things stated. So you may end up complaining, no, I'm the only one who is advertising, that one is not advertising. So I feel like I'm the only one working, the other one is not working. Okay, so you have to state what each of you is going to do. Okay. Also, the salaries of partners as the business is making profit and all, how much are going to be paying each other, okay, or how much is each going to receive as a salary, okay. Also, how and where to keep the financial records. Financial records are very important, okay. So the records, the books that shows the amount of sales you have made, or the books that shows the amount of orders you have made, they can be manipulated. If one partner is given the responsibility, okay, to keep the documents, they can manipulate them, they can change the figures. So you need to discuss how and where to keep those records. Also, you need to discuss how much each partner can withdraw from the business in case they want to withdraw. So if this article is not drawn, then the rules of the Partnership Act of 1890 will apply. So for those of you who have done partnership but never followed the rules of but never consulted the partnership deed. So in case you go to court, you want to settle something, they are going to use what is called Partnership Act of 1890. So what does this stipulate? So the content of the Partnership Act of 1890. First, this states that profit and losses are supposed to be shared equally. Profits and losses are supposed to be shared equally. So in case you never agreed on how much one should contribute by drafting the partnership deed, this is going to state that both of you are supposed to share the profits and losses. Again, all partners to contribute equal capital. This demands that both of you contribute equal capital. No partner can claim salaries. So no partner can claim a salary. Okay, no any partner is going to claim a salary according to this one. Also, the book of accounts are kept at the central place. Okay, so the books of accounts cannot be kept by any of the partners. They're supposed to be kept at the central place. Okay, so that's what the content of the Partnership Act of 1890 stipulates. So that's what the content of the Partnership Act of 1890 stipulates. So let's look at types of partnerships. So there are basically two types of partnerships. There is what is called ordinary partnership. In this one, partners have an unlimited liability. Okay, unlimited liability, you know what it means, meaning that in case the business has huge debts and it fails to pay, the partners are the ones who are responsible. Okay. Also, the partners take active part in the running of the business. Okay, they are also responsible for debts of the business. Okay, which is connected to point number 1. Okay, then the other type of a partnership is called limited partnership. So in this limited partnership, partners have limited liability. Okay, meaning that in case the business has a debt, it has incongole, it will be the business that will pay, not the partners. No. Okay. The other characteristic of a limited partnership is the partners do not take part actively in the running of the business. Hence, they are called dormant partners or sleeping partners. Okay, they are there, they have put the resources together, but they don't take part in the running of the business. No. Okay, now let's take a look at features and characteristics of partnerships. So most of them have discussed them. We just want to see if a question comes which says outline the features of partnership. How do you tackle it? So partners have unlimited liability except limited partners. It has no separate legal status, no difference between the owners and the business. It lacks continuity of existence. If both partners die, then the business also dies. Okay, just like sole trade. Okay. Membership is from 2 to 20 except for professional partnership. Financial records are also kept private. Okay. It is easy to set up as compared to the public limited companies. We haven't looked at public limited companies, but partnership is not as easy as sole trade, but it is easy as compared to public limited companies or even private limited companies. It has limited capital and lacks borrowing capacity. Again, just like sole trade, it also has limited capital and lacks borrowing capacity. Partners are the owners of the business. Expenses and management of the business is shared among the partners. So now we look at the advantages of partnership. So most of the points we have discussed them. We know what partnership is. We know what is involved in partnership. We know the types of partnership. We're just looking at now picking the same points. We look what are the advantages from these points. What are the disadvantages? So we're starting with advantages of partnership. So the first advantage of partnership is it is easy to set up as compared to public limited companies. Okay. It has more capital as it is contributed by many people as compared to sole trade. Okay. Business affairs continues even when one is here, but not in sole trade. Okay. Decision making is consultative. Okay. Which means you can't make a decision, you need to ask the partner. So decision making is consultative in nature. As a result, the quality of decisions tends to be better than that of a sole trader. Okay. Also, financial records are not published to the public, they are private. There is also division of labor. Since one partner can do this, the other partner can do this. Also, few documents are required to set up as compared to public or private companies, but of course, more documents as compared to sole trading. So as a disadvantage, you can say more documents are required to set it up as compared to sole trading, but as compared to public or private companies, few documents are required. So we look at disadvantages of partnership. Okay, the first is partners have unlimited liability, just like in sole trade. The second is it lacks continuity of existence. Death of a partner may end the business. Okay, if one partner dies or both die, then the business is going to end. Third, it has no separate legal status, no difference between the partners and the business, just like in sole trade, they're treated as one. The other disadvantage is maybe the biggest, especially for young entrepreneurs. Disagreements and quarrels are obvious to happen, and it can lead to dissolution of the partnership. Also, sharing of profits may be a source of conflict, especially if there is no pre-agreed sharing. That's why it's very important to consult that document. Without consulting that document, this is a disadvantage. So a contract made by one partners bind everyone. Okay, a contract made by one partners bind everyone. This means that if one of the partners they go and make a contract on behalf of the entire business, everyone, including the other partner, is part of what has been agreed or is part of that contract. So let's we're about to end the discussion, but before we can just conclude, let's look at advantages and disadvantages, or I mean similarities and differences between sole trade and partnership. So the similarities between sole trade and partnership include both have unlimited liability, both have no separate legal status, both have no assured continuity of existence after the death of one partner, meaning that of course for sole trade it's the one person running the business, while for partnership if one partner dies or if both partners die, then the business dies. For sole trade, if the owner dies, the business dies. So using better words, we can say there's no continuity of existence of the business in case one of the owners or the owner dies. Also, both business affairs and accounts are kept private. They cannot be accessed by the public. Now we look at the disadvantages, the differences between sole trade and partnership. So the first, we're going to use this table to analyze the disadvantages. So the first one is sole trade is formed by one person, while partnership is formed by 2 to 20 members, except for professional partnership. Also, in sole trade, profits are not shared, while in partnership, profits are shared. In sole trade, capital is less than that of partnership, while in partnership, there's more capital because of the capital contributed by both partners. In sole trade, there's no division of labor, okay, which means whatever job is there, one person has to do that. While in partnership, there's division of labor, meaning that the two partners are going to share to do various tasks. So these are the differences between sole trade and partnership. So this marks the end of this lesson. I'll see you in the next lesson.